Hey guys, welcome to the today's video. As you know, the Indian markets are going through a lot of turbulence with the ongoing war between Iran and Israel. At a macro level, I also feel the volatility and the geopolitical tensions are bound to only increase across the world. Whether it was Russia and Ukraine sometime back to the recent Pahalgam attack and the escalations between the India and Pakistan, and now a full-blown war between Iran and Israel, with US now hitting the major sites and the nuclear facilities in Iran, the conflict can only spiral to a wider region. I also believe strongly that with advancements in AI and the deep tech, this coupled with the tariff wars will further destabilize and change the wealth concentration in future across the countries and lead to more civil unrest and conflict situations. Now, in such a geopolitical scenario and instability, there is one industry that I'm highly bullish on from a mid to a long term perspective is the defense sector. In this video, let's do a detailed run through the sector and I'll try to break down the company's stocks across the value chain and the category types. We'll then look into the fundamentals and what I believe are the good value buys, which can compound at least 15 to 20% plus CAGR over the next few years. So let's get started. Now let's have a quick look at the impact of the wars on the defense stocks, starting with the Masdok shipbuilders. This is one of the major shipbuilding companies in India. If you see from the bottom levels of about 2100 back in the April, the stock has almost given a run up of about 55-60%. Same is the case for the other stocks. Let's have a look at the category leader, HAL, Hindustan Aeronautics Limited. From its bottom level of about a 3019, the stock has is now almost about a 65-70% up. And if you see again from the levels after a Pahalgam attack, this is again a run up of 20-25%. Now let's have a quick look at what is happening with the overall defense index, which is a Nifty defense. If you see from the bottom level, this is almost this is up by about 79%. And if you see from the time of the Pahalgam attack, which was somewhere in the April mid, it has given a run up of 40-45%. So massive growth is happening in the defense stocks. Now that we have seen the massive run up in the defense sector stocks, let's try to understand the factors behind this. If you have a look at the defense budget allocation back in fiscal 2013-14, this was about 2.53 lakh crore. Now it has almost grew to a 2.5 times growth in the defense budget allocation and about a 10% YOY increase from the 2024-25. Now, if we have a look at the how the exports have been moving, and this is where the real growth comes for the stock value going forward. Back in 2013 fiscal, we were just insignificant at a 700 odd crores. Now, current fiscal exports are standing about a 23,000 crore. This is almost about 30 to 40 times growth, and this is 32.5% YOY growth. The target for 2029 is almost about a $6 billion in the export, which is roughly about a 48 to 50,000 crore. So this is the big driver which will drive a growth for the defense industry. With this, we come to the important part of the today's video, which is classifying the entire Indian defense stocks, dissecting them into the different parts of the value chain. We'll start with the first category bucket, which is the aircraft and the helicopter manufacturing firms. These are the companies that are behind the design, development, repair services for the helicopters and the jet fighters. Our second category bucket is the missile manufacturing companies. These are the ones behind the missile systems and the missiles like BrahMos and others. Then we have the warships, aircraft carriers or destroyers. This also includes likes of the INS Vikrant. Then the fourth bucket is the set of the companies which are behind the electronic components, system assemblies, the semiconductor assemblies, which are behind all the electronic components that are used to power these weapons. The last bucket is the set of the companies which are part of the other ancillaries. These are the training, development. These are into the radar systems, explosives. Now that we have understood the entire industry landscape, I'll take you through what are the top five stocks that I think in each of these category buckets or the value chain. I'll take one of the stock which I believe has a strong fundamentals and the likelihood of compounding with a 15-20% plus CAGR in the next few years. One of the strong fundamental opportunity stock is the Hindustan Aeronautics Limited, the first one in the list. We'll do a quick run into the stock fundamentals and the growth potential, but before that, let's understand what the company does. So, Hindustan Aeronautics Limited, this is primarily involved in the design, development, manufacture, repair, and overhaul of the aircraft. Some of the names of the aircraft like Tejas, Dornier, Su-30, and unknown helicopters like Dhruv, LCH, Chetak, etc. If we look at the revenue breakup, about 47% comes from the repair work and the overhaul of the helicopters. Close to about 20% is the spares. From the sale of the aircraft and helicopters, about 18 to 20%. Now looking into the price volume chart of Hindustan Aeronautics, if you see there is a heavy volume buying that is happening from the institutional investors, which is correlating with the price spike. Now again, if you see from the April onward, there is a big volume buying that is happening in the stock. Stock is still 10% corrected from its peak of 5,500 to now trending about a 49, 4,700. If you look at the price to earnings ratio or the valuation of the company, so while the earning per share is expanding, the PE has corrected. So PE is running about a 39 versus the peak of 48. So it's available at a good valuation right now. If you look at the median PE for the entire defense stocks category, this is about a 74. So the stock, despite being the category leader, is with a market cap of about a 3,26,000 crore, is still operating at a modest PE. Looking at the quarterly results, if you see there's a good quarter-on-quarter earnings, profit is looking healthy. If you look at the net profit at a quarter level, this is looking good. At the end of fiscal quarter is looking good. We can also look at the recent con call transcript and try to understand the growth outlook for the company. Let me download this and run via GPT and see. Yeah, so guys, what you can do is you can just download the transcript of the latest con call of the stock, and using a chat GPT or any other generative AI LLM project, I'm using a chat GPT here. You can summarize the entire takeaways from the 10, 15, 20 page document and get the insights. So let me do that just to show you. So run through the attach con call transcript for Hindustan Aeronautics Limited. Summarize the key takeaways for the retail investors looking into the management actions, capex investments, growth outlook, and suggest the pros and cons for investors to take the stock buying decision. Now let's try and run this. So yeah, it's running in detail the entire summary understanding of what are the management takeaway and the actions. So key management highlights. HL has become the first defense PSU to attain the Marathon status. So order book looks very strong from about 94,000 crore in FY24. This is almost like a double now, and these are where by the order book, this is between the different jet fighters. These are the latest helicopters, Sukhoi 30 MKIs, R&D orders, and so on. Revenue and profitability. FY25 revenue is up by 7.25%. Margin is 35%. So capex and expansion plan looks solid, about a 14 to 15,000 crore over the next 5 years. Overall growth outlook basis the execution visibility till 2032 is over a 1 lakh crore in the pipeline for the next couple of years. So these are the pros: healthy margins with a strong order book, heavy capex driven growth, a lot of tailwinds into the category by the Make in India initiative, diversification, and then these are the possible risks, right, in the execution that could happen. So in this way, you could analyze all of the stocks yourself and do the primary research. And it does not take more than just a few minutes to do it using the ChatGPT. The next high potential growth opportunity stock is Bharat Dynamics Limited. This is into the space of missile systems and ammunition. The company specializes in the guided missile systems and allied equipments, including surface-to-air missiles, anti-tank guided missile systems. Now, if we have a quick look on the revenue breakup, about 80% of the consumption for the business revenue comes from the Government of India defense budget allocation, and about 7% is the exports. Looking into the price volume action for the Bharat Dynamics Limited, if you see, there is a heavy buying activity that is happening in the month of May. This is exactly from April to May, this is the time of the wars. And this is given the run up in the stock. From its peak of about 2000, the stock is now corrected to about 1800. So there is about a 10% correction from the peak. Looking into the PE ratio, while the stock valuation has been a bit heated and overvalued, but there is a correction. This should stabilize around 90 to 100 PE with the improved earning per share in the coming quarter. Now, if you look at the reason for the heated valuation for this stock, it's all-time high sales. Sales have almost doubled from the previous quarter, and this does not factor the quarter of the AMJ, where all the heavy buying of the defense missiles is happening right now. After the success of the BrahMos missile in the Operation Sindoor, this is the company that manufactures in joint collaboration with the DRDO. While the operating margins have been hit, but this should improve and the net profit should expand in coming quarters. The third stock with the growth opportunity is the Cochin Shipyard Limited. This is the shipbuilding and aircraft carriers, destroyers, manufacturing and repair company. Now, if we read about this, so it is India's largest shipbuilding and maintenance facility, a mini Ratna company under the Ministry of Ports, Shipping and Waterways. It is involved in the construction and repair of various ships, including defense vessels, aircraft carriers, and commercial ones. Product-wise revenue breakup, shipbuilding contributes almost about 50%, followed by the repair services, and then followed by the others. A quick look into the fundamentals of the Cochin Shipyard. If you see in the last 1 year, the stock is trending at about 20-25% lower from its peak. The peak of 2800, now it is trending at about 2100. If you see, this is what I was trying to explain. So from the mid of April, there is a heavy institutional buying for the stock. It can be seen in the April and the May. And this is correlating with the price increase for the stock. Now this is at the time of the Iran-Israel war in the June. This is further intensifying the growth. A quick look at the PE ratio. From a peak of 91 price to earnings, now it is trending at about 66. So there's a 30% correction in the price to earnings and EPS is expanding. Looking into the quarterly earnings, there is a modest quarter-on-quarter earnings growth into the stock. This is at a record high sales, record high profits. At an annual level, if you see, this is again year on year, the growth has been strong. Operating margins have been maintaining above 20%, and the PAT is the highest, around 850 crores. A healthy dividend payout ratio, so a strong bet to compound at least 20-25% year-on-year growth from here. The fourth stock in the list is the Bharat Electronics Limited, into the space of the manufacturing of the electronic components that power the weapon systems. A quick read about the company. It manufactures a wide range of electronic products and systems for defense, including radars, missile systems, naval systems, communication, electronic warfare systems, and electro-optics. This broadly covers all the electronic components behind the weapon systems. A quick look at the revenue breakup, 89-90% is from the defense allocation, and non-defense is about 10% revenue. Looking into the fundamentals for the Bharat Electronics Limited, this is one of my also the favorite stock because it's a category leader in terms of providing the electronic components, semiconductor devices, assemblies that power all the weapon missile systems for the defense sector. If you see, there is again a very heavy growth from back early into the May from a 300 odd range. Now the stock is almost about 408. Heavy buying happening into this stock, almost a 30-35% run up from the start of the May. Now, if you look at the quarterly earning report, sitting on the highest ever sales, highest ever PAT of 2100 crores, earning per share expanding to 2.9. At annual level, again the same, pretty much the same. If you see from year on year, sitting on the highest ever, about 24,000 crore in the sales, on a PAT of 5,300 crore, and solid dividend payout ratio of 35 to 40%. Now comes the last and the fifth stock in the category of ancillary services. This includes the training development solutions and counter drone simulator kind of solutions. This is the Zen Technologies. The company designs, develops, manufactures combat training solution for defense and security forces, including the advanced defense training simulators and counter drone solutions. Entire 100% of the revenue breakup is from the sale of the simulators. Again, a very high potential opportunity stock in this category. Looking into the fundamentals for Zen Technologies, if you see from the peak of 2,500 odd, now the stock is trending around 1,900. So 20-25% correction in the price. If you look at the price to earnings ratio, again from the early Jan, where the stock was overvalued with the price earnings of 107, now it has been, now the valuation is corrected to 61, is available at a fair value buy. Earning per share is expanding strongly. Looking into the quarterly earnings, it's sitting at one of the strong exit for the March, over 300 crore in the sales, PAT over 100 crores. Again, at annual level, doubling up from the last year. Profits more than doubled. It's actually a 2.5x growth. Earning per share, again, 2x expansion in the earning per share. Yeah, guys, now that we have captured the top 5 potential bets in the defense sector, I'll also explain you alternate route of investment through the ETF, wherein you can invest directly into all the bouquet of defense sector stocks traded on the exchange. And one such example is the Motilal Oswal ETF. Yeah, so this is the Motilal Oswal Nifty India Defense ETF. The ticker name is MOD Defense. Total AUM is about 450-500 crores. PE is running right now around 62. If you look at the portfolio breakup, asset allocation is spread largely on the large cap defense stocks, which is about 60% plus, followed by a 20-21% on the small cap and 17-18% on the mid cap stocks. If you look at the holdings details, almost about 18-19% is on the Bharat Electronics Limited, followed by the Hindustan Aeronautics Limited, Solar Industries, Mazgaon, Bharat Dynamics, Cochin Shipyards, Zen Technologies, Astra Microwave. So in this way, you can invest into the entire bouquet of defense sector stocks. And this is for anyone who has not a complete depth onto a particular stock, can also invest into the larger defense category at a very minimal expense ratio of 0.4%. And you can do not only through this, you can do through any of the other alternatives. Guys, this brings us closer towards the end of today's video. But to also help you out to understand how the allocation mix should play out, and this is just what I am following. This is not any form of investment advice. You should do your own research and then decide what is the right allocation mix for you. But for me, it is about 25% on the HAL, 20% on the Bharat Electronics Limited, 15% BDL, Bharat Dynamics Limited. So if you have a overall, let's say a pie of allocation budget, I would typically have a 20-25% allocation on the entire defense category of my overall equity portfolio. And then out of that, roughly about 25% on the HAL. Then you have about 20% on the Bharat Electronics Limited. Then you have roughly 15% on the Bharat Dynamics Limited. Then you have about 10% on the Cochin Shipyard Limited. Then you have roughly about another 10% on the Zen Technologies Limited. And then the balance 20% in the form of ETF. But this depends on your risk appetite and your investment considerations. But this is what I am following. You guys, with this, we come to the end of today's video. And I hope I was able to explain you the entire industry landscape in detail. And we were able to touch upon the different aspects on the different stocks. And the purpose of the video is to give you a strong insight and the directions. But this should not be considered as an investment advice. You should always do your own research and then take a call on whether you want to invest into a particular stock or no. If I was able to add the value to your thought process today, so do hit the subscribe button and we'll see you on the next video. Take care.